Hi guys, what is up? Welcome to this video. This is accounting principles of accounts, and we'll be looking at accounting ratios. So I'm gonna actually walk you through the basics of these ratios. So if you're new to my channel, please support me by liking, subscribing, and also sharing. Okay. So some of the basics or fundamentals in accounts, more especially on the accounting ratios. Okay. So now we need the accounting ratios in order to analyze. So we must be able to analyze and also interpret accounting statements. So interpret accounting statement. Okay. So some of the ratios that we must be able to know or rather talk about is we have what is called turnover. We also have what is called let's say we can just say maybe the markup or even just the margin. And then also liquid ratio, liquidity. Okay, liquidity ratio. Then we also have things like cost of sales. Yeah, maybe cost of sales. And then we also have what is called the rate. So the rate of stock 10. And then maybe we also have what is called cost of purchases. Purchases. Okay. So there are many of these accounting ratios, but we'll actually stick to the basics and so that we can be able to understand how we can go about that. Okay. Normally, some of these are not ratios. Okay. Like for example, let's say when you're talking about the liquidity ratio, this is a more specific ratio, but each one of these is not necessarily the ratio. Okay. A rate of stock turn, this is a ratio, and other debtors ratio, all those ratios. But all in all is that whenever we are looking at these accounting ratios, so they normally help us to complete. So complete the incomplete records, so that Okay, so these account ratios, they normally help us to actually, complete the incomplete record so that we can construct a financial um, statement, okay, such as a trading account, profit and loss account, and even just the balance sheet, okay. So we start off by looking at the markup and margin, okay. So normally when you're looking at the markup and margin, so when you talk about the markup, okay, this has to do with purchases, for example. Okay, so as the owner of the business, you tend to purchase stuff from different suppliers and just, so that you can come and make a profit, okay? And then when you're looking at the margin, okay, so the margin is normally has to do with the sales, okay? So how much profit are you making per sale? So now over the margin there, um, since it has to do with something looking at the sales, okay, so we normally have the things like let's say the selling price, okay, the selling price is normally equivalent to the cost price, how much it was costing to get that stuff, plus, okay, so plus the gross profit, okay, plus the gross profit, so plus the gross profit, yeah. Now when it comes to so you have two things, so you have the cost price, then also have the selling price. So over the selling price, this has to do with margin, okay, margins in terms of sales, and then this has to do with the purchases. I mean the markup. Okay, something to do with the markup. So we see what we mean by that. Okay, so when you look at the markup, when you look at the markup, when you look at the markup, we are looking at the gross profit. Okay, so we are looking at the gross profit and the cost price. Okay, the cost price. Okay, and now from this simple equation, let's say you are selling. Let's say you have the gross profit maybe per sale. The gross profit maybe per sale is maybe let's say 1 kwacha, okay, and then the cost price per item is, let's say, for example, 4 kwacha, and then the selling price per item, we can actually just put it as a 5 kwacha, okay. So let's say, so now this is normally expressed as a percentage sometimes, okay. So this is the gross profit over the cost price is gonna actually give you the markup. Okay, and then from there now, this one can be expressed as a percentage. So then you can say gross profit, or just use the shortcut there, and the cost price is CP multiplied by 100, and now this gives you the markup. Okay, so the markup, so something to do with the cost price of something. Okay, so when you know the markup, you can be able to understand how much you can be selling your product. And from this perspective, let's look at this example and see what you're going to actually have. So we're saying that the gross profit is 1, and the cost price is 1, and the selling price is 1, and so the gross profit is 1, but out of the cost price it is 4. Okay, or simply as a percentage multiplied by 100, which is just going to give you 25%. So it's gonna actually give you 25%. Okay, so make sure you do understand what you're talking about. Okay, now what about the margin? Now when you look at the margin, it actually deals with the selling price. Okay, the selling price, which is selling the gross profit. Okay, so the gross profit, so the gross profit over the selling price. So we're expressing this one as a percentage, and just do that. Okay, and now from this simple example, for the idea of illustrating on making simple stuff, is the gross profit is 1 and the selling price is 5. So this is actually gonna actually change to 1 out of 5. Okay, multiplied by 100, and this will give us 5 into 100 is just 20. Okay, so once we understand these two things, okay, then it's gonna actually become very possible for you to be able to find different other thing. Okay, so when we look at this idea, we are saying that let's say, for example, we have, looking at the simple rule. Okay, you can see what you're talking about. Okay, so now this paper is 2008. So you can see that F. Chisaka, a businessman, prepares his financial accounts annually, and the following information relates to the year ended 31 March 2008. So you have the capital, 50 million, sales 60 million, stock, this is the opening stock, 10 million, the closing stock, 12 million, returns inwards, 4 million, gross profit, this is just 20 million, and the expenses are 15% of turnover. So this tells you now, it says required calculate for the year turnover. So just to help you understand what you're talking about. Okay, so normally you have to pay attention and understand what you're. So turnover is just simply the total sales. Okay, so we have sales and returns inward. Okay, so when customers comes back to you, they maybe you might have sold them something that is not what they wanted, or maybe there is some damage, so that part of goods will be returned to you, and that is returns inward. So so if you have sales so if you have sales minus returns, okay, returns inward, it will give you what is called turnover. Turnover, or sometimes this is just called net sales. Net sales. So from this simple information, we have the sales as 60 million, and also returns inward is 4 million. Okay, and this will just give you, I think, 56. So 56 million. Okay. Okay. So now, the way you solve this kind of question is that you have to be very careful, because you don't follow the order in which they have been asked. And from that point onward, when you look at net profit, okay, so net profit, let's call it NP, is normally equal to GP minus the expenses. Okay, minus the expenses. Now the GP is gross profit, NP is net profit. So what is happening is that it's very difficult for you if some of the things are missing alone. So we have the gross profit, which is 20 million, and the expenses are 15% of turnover. So this will just give you gross profit is 20 million, okay, minus. Now the expense is normally just 15%. So 15% out of the 100% multiplied by the turnover, which is just this one, and this will give you 56. That is 56. So the percent goes. So when you do the simplification, you discover that we are just looking at when you use your calculator, just looking at, I think, 8. Is that 8? Yeah, sort of. So you can confirm that, guys. Okay, so 8 million, or yeah, so 8 million, 8.4, or 8,400,000. Okay, so this is 15% of this. Okay, so meaning this is the actual amount of the expenses. Okay, actual amount of the expenses. So what you do now is you get that money or that figure, and then you say you put it there. Okay, so from there now you say 20 million minus that, you just get I think 11,600,000. Okay, and this is a net profit. Okay, now what about expenses? Okay, so this is found that is found. Then also expenses. So expenses is just that 8 million. Okay, so this is also found. And now when you go to rate of the stock 10, rate of stock 10 is normally given as a cost of sales of average. Okay, average stock. So when you look at let's say cost of sales. Okay, so cost of sales is we are saying that we normally convert these guys into normal markup and also things like markup. So the markup is something that we are saying is a gross profit over the cost price. Okay, so the cost of sales. So that's actually the markup. Okay, and the margin. Sorry, the margin. Okay. So the margin is gross profit and over the selling price. So we can just call them cost selling price or cost or whatever. So GP over cost price, we can say multiply by that is gonna actually give you, okay, so multiply by 100. Okay, but of course this is not going to give you anything. So what you do is, so what you're going to do in order for you to find the cost of purchases. Okay, so what you normally do is you say stock 1 plus purchases, maybe minus stock 2, and stock 2 equals the cost of cost price or cost of purchases. Okay, so now when you look at this one, we don't have the purchases. Okay, so it kind of becomes very tricky. So this is what I'm gonna actually show you in the next video. So make sure you stay alert, and in the upcoming video, I'm going to show you how you can answer this one by means of drawing up the profit and loss. Okay, so the trading, how we can do the trading profit and loss account, so that we can figure out the purchases and other stuff. Okay, so thank you so much for watching, guys. Please remember to subscribe to my channel so that you don't miss any information on this one. So bye bye. This is Professor Bada, and I'll see you in the next video.